All right. Okay. I'm going to back up just a little bit, and say welcome to this forum on Arlington and a different approach to insurance. I just want to say that this came out of when Mr. Fischer presented his article on researching the prospect of Arlington doing self-insurance to the select board back in 2021. And the select board voted no action on it, but I told Andrew that I would be happy to work with him to explore some possibilities. Essentially, he really wanted to get the town to research what how much people were spending on insurance. And so the civic engagement group came along, and I thought this would be a really good way for us to bring this topic before the town. And so Andrew and I have been working on it for a little bit. And so with no more delay, I'm going to turn this over to Andrew Fischer. Andrew?
Hello.
I can hear you.
Yes, you can hear me?
Yeah.
Okay, thanks. Welcome everybody to our conversation on insurance, and thank you for being with us. I'd like to thank the Civic Engagement Group of Envision Arlington for sponsoring this Zoom call. The title of the talk is, Can Self-Insurance Help Arlington? And we hope to just start a conversation comparing self-insurance with premium-based insurance. The slide is not advancing.
Just hit the down arrow.
Nothing's happening.
Hit the right arrow, maybe.
Right arrow, down arrow. Oh my. Oh, here it moved forward by clicking on it.
Okay.
Don't let these cute creatures fool you. They work for the company, not for you. Before I talk about these goals, part of the backdrop to this conversation about insurance is that Arlington's budget Armageddon. Since 2019, the town manager's financial plan includes a commitment to find insurance sources, to find new sources of revenue as part of the solution. One area ripe for investigation as a possible source of revenue is the $35 to $40 million that we Arlingtonians altogether pay for auto and property insurance claims. Could a self-insurance model produce significant savings with each town or city participating in a network of self-insured, community-based insurance plans overseen by the state? Also, I'd like to point out that we're really talking about the structure of insurance in general, including auto insurance and public insurance, property insurance, public insurance like Medicare and Medicaid. And finally, I'd like to hold questions for the end because many questions will be answered by the slides as we progress. My discussion will take about 17 minutes and we'll have an hour or longer to discuss them. What we'd like to accomplish tonight is just simply start a public conversation about how premium-based insurance works compared to how self-insurance works. We'd like to stir up interest in learning more about how insurance works in Arlington, share concrete examples of what we could do to get started exploring this topic, and simply keep the conversation going. There are three takeaways I hope everybody will remember. Before I go into the takeaways, I'd like to say, let's agree that self-insurance means a group pays into an insurance reserve and pays claims out of that fund at cost. There's no middleman. The three takeaways are, first, in a nutshell, with self-insurance, the energy works to promote health and safety and save money for the community. With premium-based insurance, the energy works to grow the company and make money for the company. The overall effect is self-insurance unites and premium-based insurance fragments. The second takeaway is self-insurance is an accepted standard practice. Most large organizations move to self-insurance when they can. And third, Arlington pays an estimated $40 million for auto and property premiums. Shouldn't we know what we're getting for that amount of money? So why is self-insurance better? Sorry. What's wrong with premium-based insurance? There's too much fragmentation and the incentives are misaligned. Fragmentations because each community has a limited number of residents belonging to many plans. Finances and data on the causes of loss are less fragmented. The incentives are misaligned because it's often in the interest of the plan managers to simply exclude the coverage for the types of insurance that you most need. For instance, termite damage is excluded, basement fuel oil leaks are excluded, and we just learned last night your water main is excluded if it bursts. And each of these companies is apparently not incented to inform each community of the causes of loss specific to each community. Why is self-insurance better? The plan members are the insurer and the incentives are aligned. Let's look at our definition of self-insurance. Instead of paying a third party to collect money and pool risk, the community members pay into their own fund. Claims are paid out of that fund at cost. The self-insuring group owns the data, and the data guides targeted prevention. The savings from prevention accrue to the community. The key takeaway here is that self-insurance enables a truly powerful capacity, which is to measure the rewards of prevention. This is remarkable. This is remarkable because the reward prevention is nothing happened. How do you measure nothing happened? You measure nothing happened by being able to see the return on investment to concretely know that a prevention program worked. This is a sharp contrast to the dynamics of premium-based insurance, where attention is too diffuse to inform and galvanize people to take action. Because they can't save money much anymore by prevention, competition requires premium-based insurance to keep their premium low, which requires closely matching individual policy price with the individual person's risk. By zip code, in some cases, they're allowed to price according to your credit score. That's illegal in Massachusetts. Your age. This leads us to a situation reminiscent of this poster. Premium-based insurance intensifies a kind of class-based separatism. This leads to articles like this in the Boston Globe. In some metro areas, even the best drivers face steep insurance rates. This article describes an electrician whose truck costs $550 a month with safety insurance. I have a 5-ton box fan also with safety, and my monthly cost is about 1/5 this amount. Andrea Campbell, the Boston City Councilor, held a public hearing on this issue. There were plenty of questions, some focused on if accidents on interstate highways through the zip code are credited to the zip code regardless of the driver's actual home zip code. There were complaints about the lack of answers, and after an hour of talk, there was no true, real action to be taken. It felt demoralizing and disrespectful that there were no answers. Competitive insurance, also been called disconnected insurance, throws up a curtain between a community and its problems. Community residents cannot see shared issues because insurance companies are the only ones privy to the relevant data. Here's another example, one of many. City managers denied leukemia in Woburn. Citizens met in a church basement to count the cases and try to convince others that there was a problem. And it took years of tragic conflict before anything was done. Again, part of the problem is our civic infrastructure is such that only a few customers are in each insurance plan, meaning only very few leukemia cases were happening to each insurance company. So they didn't raise a flag. They didn't see the trend. This is not only a problem for private insurance, it's also a public problem. Medicare, Medicare Advantage, Medicaid, they all operate without relationship to community. Some examples are Medicaid paid for lead poisoning in Flint for 1.5 years without raising the alarm. Opiate prescriptions along the Ohio River, among other places, were paid for by Medicaid and they did not raise the alarm. Right now, we have the potential for increased gambling addiction. We have no metric, no way of knowing if that's happening. Now, this kind of, we want to do more, we're capable of knowing more, we can do more, we want to know more attitude is coming down the road, and we should get ahead of it because of the issue of fragmentation. Friend assurance, this is from a Harvard Business School case study. Friend Assurance is a company which in 2010 introduced the world's first peer-to-peer insurance model that rewards staying claims-free. Customers select the insurance product they want and are connected to a small group of other similar people, and or they can bring friends of their own. A portion of the premium is paid to the backup insurance company, and another portion is kept by Friend Assurance in a cashback fund. As claims are made over the course of the year, the cashback fund decreases. At the end of the year, any remaining cash in the fund is distributed to each customer in the group. On average, 80% of customers receive cash back totaling roughly 30% of the premiums paid, which reveals that the price was 30% higher than necessary, and the company is still making a profit. But the major point here is these customers extracted themselves from the risk pool at large. They removed their subsidy from the community at large, which increases the costs to folks who are not as socially well-connected or privileged. What could these ideas mean for Arlington? Estimates indicate that a statewide network of community-based insurance plans could produce revenue to pay for prevention and maybe more. We do know that Arlington has 32,000 vehicles, according to the assessor's office. If we suppose that Arlington's premiums are lower than the state average of $1,180, let's say $700 a year, then our auto insurance cost per precinct is $1 million per precinct. The Mass Division of Insurance tells us that in 2019, Arlington spent $16 million on homeowner insurance. So together, each precinct is paying $1.75 million for auto and homeowner insurance. And that's an astounding amount of money. We'd have to burn 2 houses down and have a lot of auto accidents for that amount. How could we gather facts rather than estimates? We could survey Arlington residents. We could design a pilot survey to collect car and property insurance data, test the pilot on one precinct with lit drops and then Survey Monkey, and then proceed to do further precincts. We could cast the project in terms of unity, our right to know as a community. And the immediate purpose would be to learn if a self-insured Arlington plan operating as a member of a statewide coalition of local plans could generate income to pay for a part of police and fire budgets to supplement the property tax. This would be done with strict respect for privacy rights. Potential projects for a committee on insurance. I mentioned the survey. We could propose a new design for Medicare Advantage, which has my attention now because the federal watchdog agency that oversees Medicare and Medicaid has said that there is an urgent need to overhaul the design of Medicare Advantage. We could have a subcommittee on prevention, which would do projects by asking what would Arlington be doing if we were in one unified self-insured plan among many plans throughout the state. We would be carrying out prevention work as needed, especially to prevent fuel oil leaks in basements, termite damage. And if you ask me, to measure any increase in gambling problems. Another truly exciting possibility is to examine insurance reserves. Are they invested in the public interest? Can they be used for infrastructure rebuild? Next steps, we will be scheduling a second meeting next week. We have an expert that will join us, the person who runs the town's self-insured workers' comp program will be with us. We'd like to simply ask you to widen this public conversation and start an email list so that we can keep you notified of further meetings. My email is andrew.fisher25@gmail.com. I think I somehow skipped a slide, but thank you all for your time checking this out and giving it a hearing. I'm going to hand it back over to Len. Back to you.
Thanks, Andrew. And if you want to go back and see if you've missed a slide, that's fine. We have time. You want to circle through?
Yes, I am. Thank you.
Sure.
In my
I think you covered everything.
I didn't do the second half of this. These are examples of how self-insurance can work.
Yeah.
The town of Arlington self-insures for workers' comp. And the previous manager of this plan explained to me that they do monitor their losses. They had a rash of back injuries. So they instituted a prevention program for that. They can purchase these kinds of things. They had a bunch of trips and falls. Manitoba is a self-insured single-payer auto insurance program in Canada, which makes sure everyone can have snow tires by sponsoring a lending program. Anyone can walk into a tire dealership in Manitoba and buy up to $2,000 worth of snow tires and pay it back over time to the auto insurer. And also large employer-based health plans, which emphasize return on investment, routinely do incredible prevention work. They call it establishing a culture of wellness. So that's the one I missed. So thank you.
All right, sure. And so what I'll suggest that you do is you can stop screen sharing and if you, excuse me, if you want to turn on your camera, you're welcome to do so. I just want to let you know your camera's not on. If you don't want to, that's fine. And I'll just say a couple of minor corrections. And I think we'll ask Jay if he wants to say something. So one thing is that we may schedule a meeting. We may work on scheduling a meeting next week. The meeting will not take place next week. For
Right.
2 reasons. One is that the person that we would like to have is the deputy town council, who he's a deputy town council for workers' compensation. His name is Michael Cunningham. He won't be back for I think another week, a week and a half. And I think also we probably won't schedule the next one of these until September, October. So it'll be a little while before we actually have the second one. And the other, it was just a simple misspeak. The water, there's no insurance for water line damage. I mean, we learned that from a participant in last night's civic engagement group meeting. It wasn't water main, so apparently there's a water line issue at her place that costs a significant amount of money. Apparently insurance companies aren't covering it, but they're thinking about it, but at least at this point it isn't. And so with that, Jay, or Andrew, do you want to introduce Jay or just?
Sure. Jay was actually in the Globe in 2019 because of one of these fuel oil leaks. Go ahead, Jay.
I need to unmute you, Jay. Sorry about that. Did you get asked to unmute?
All right, there we go. Yes, I had an experience several years ago where I did have a leaky oil tank in my basement and learned a great deal about insurance coverage and lack of coverage, as well as something I think that Andrew was mentioning earlier, and that has to do with risk mitigation measures or prevention loss. And I found that a lot of the costs, fortunately in my case, it was under $10,000 but with many of these cases with oil tank leaks, it can be in the hundreds of thousands of dollars. And in talking with my neighbors who have oil, I found that most of them not only didn't have insurance, they weren't even aware that they didn't have insurance. Insurance companies can send them a list with the various riders that they can apply for, but they don't have to inform them that that kind of coverage is available or that they should be getting it, particularly those with obviously with oil tanks. Another problem connected with it is that a lot of oil leaks are found not by people who actually have currently heating with oil, but by people who former homeowners had heated with oil. In one situation, the homeowner, this was a couple that was retiring and getting ready to sell their home after living in it for nearly 50 years. They had never heated with home heating oil, but the inspectors for the new prospective owners found that there was a place where there had been a leak, and it cost them hundreds of thousands of dollars for the cleanup of that project. And you can't get insurance, to my knowledge, to cover oil spills that had happened previously. You can only get it if you have an oil tank in your basement now and are using home heating oil. And as you know, about a lot of particularly older towns like Arlington, huge number of houses at one time heated with oil. And of course, in the past, people weren't always as careful with it as they are now, given what we know about environmental problems. I think it's 34% roughly of homeowners in Massachusetts are heating with oil. So it is a potentially big problem. There are about 100 of these cases a year that are reported, but probably many more that are not reported, which means that it's not being cleaned up in those cases, and it's a future property owner that'll be stuck with the bills on it potentially. Another thing I learned in this process was that there are a number of fairly low-cost mitigation measures that a homeowner can take if they're heating with oil. And these are things that that your oil delivery service generally doesn't tell you, and things that your insurance company probably doesn't tell you. And that is that an oil tank should be replaced after 15 years. And since oil is an older form of heating, generally, tanks are often older than that, and people don't replace it until there's a failure. Oil companies offer tank replacement insurance at a very low cost, but once it's only when a tank leaks, so they won't cover you if after 15 years you want to replace a potentially faulty tank. Thing to keep in mind with these is that the leaks occur from corrosion on the inside. You don't see it on the outside until it's too late. Another thing that there are trays that can go under tanks. There are alarm systems, fairly low cost alternatives. Tanks themselves are really fairly inexpensive. If you want to get a tank that's insured for environmental cleanup costs, there are a few companies that actually make them and sell them, have double walled stainless steel panels and so forth. And I think those go for around $1,000, which is, given the overall risks, it's not that expensive, but even a new tank is only going to cost you $300 to $500, I think, for a regular tank. So again, replacing it every 15 years is a fairly small cost. Other types of devices, the fire department has recommended that the oil delivery companies provide their customers with these small magnetic plugs. And I learned about them when the fire department came in and popped one on the bottom of the tank where the leak was, and it immediately stopped. And it's a small device you hold in the palm of your hand, and costs under $10. And again, it's something that is an easy, something that's easy to mitigate that problem, as are some of the other things I've mentioned. But insurance companies and oil delivery companies are not proactive in sharing this information. So I just wanted to mention a few things there that in terms of my experience with insurance coverage for that particular risk, which was leaks from oil tanks. So anyway, that's all I have to add on that. If anyone has questions on it, I'll be happy to answer.
Thanks, Jay. And I'm sorry about my video going on and off. I'm getting a little dinner here. It's just been one of those days where it's been hard for me to get food needs. So just getting it when I can now. So Andrew, I see your hand up, but you should be able to speak.
Okay, can you hear me?
Mm-hmm.
I just wanted to add to Jay that when we bought coverage for our fuel oil tank this spring, we could only buy up to $50,000 worth. It was $75. But Hanover they won't cover more than 50,000, and often the damage goes into the hundreds, occasionally a million. That's all.
Well,
Yeah, I wanted to mention one other thing too in that regard. So one other mitigation factor, part of the problem is that, particularly in the older homes, if you've got a crack in the cement in your basement floor, oil will leak through that into the subsoil, or in one case in East Arlington a couple of years ago, into the water table. And by sealing up cracks in the basement floor, that's another mitigation measure that can be taken. And also, of course, it helps prevent radon gases in the basement. So, that again is something that perhaps a self-insurance group would make their members aware of.
So, well, I would say at this point, if you want to ask any questions to Andrew, Jay, or even me, I don't know. Although I don't know why you're going to ask me at this point, but I'm happy to answer questions, or I'm sure Andrew and Jay are too. So, you want to raise your hand? It's fine. Oh, sure. So the raised hand should be in reactions, and but you know what? I see that you sent the question, so I can just ask to unmute you now and save you that effort.
Okay, thank you.
Sure.
I just had a question about the, excuse me, about the notion that you talked about earlier about how the self-insured group owns the data and that the data guides targeted prevention efforts. And I'm just wondering how that kind of function interacts with the privacy issues that you noted earlier. How would the data be collected and analyzed? And I assume you're talking mainly about claims data, right? To get a sense of what kinds of losses people are experiencing in the community. How do you collect and analyze the data and protect the privacy of the participants in the program? Because I would think that would be a significant issue for a lot of people.
Well, I'm going to jump in and say that, at this point, it wouldn't be a matter of how you do it. It would be a matter of it's something you have to do. And so I would say at this stage of the discussion, let's say it is something that we wanted to move forward with, then we would be looking at concerns and things that we would need to take care of in order to make the program viable. And so security and privacy is definitely a concern. How you execute on that would be something that we'd have to figure out. Now, if your question is that, well, you think it's not possible to figure that out, then I hear you, and we'd have to prove the case otherwise. Andrew?
No, I assume it's possible to figure it out. I just don't know how. And I imagine that, if you're interested in kind of promoting the idea to people, that's a question that some people are going to want to, have some answers to.
Yeah, definitely hear that.
Yeah,
I agree. And so, and thanks for bringing that up. And it's certainly something that I think I see Andrew's hand up, and it's probably something that he may want to address in another forum. So yeah, I hear you. Thanks, Andrew.
Yeah, it's routinely done. They just de-identify the data. Some examples are Pitney Bowes. This is an older example, but they have to conform to the HIPAA rules, but they were able to see that a lot of their cost from their chronic condition people was not caused by their illness. It was caused by the amount of times that they had to go to the emergency room. So they increased the benefits. They removed co-pays and provided coverage for really Cadillac drugs to get people to take medicine all the time. Because what they were finding was, because of co-pays, people would try to hoard their medicine when they were feeling good. So they wouldn't feel good after hoarding medicine, and they'd go to the emergency room. And that's where their cost was. And they saved $1 million a year by increasing the ease with which people could get their prescriptions and lower the cost. But they did that without violating anyone's privacy. It's probably the major issue, one of the major issues, along with reinsurance.
All right. Okay.
Thanks for the question.
Just another thought, if I may.
Sure.
It just occurred to me when you mentioned reinsurance. Would it be necessary to have some kind of stop loss insurance in case you'd have to go buy stop loss insurance from a private insurer in the event that your claims exceeded your capacity to pay?
Right. The two things. One is British Columbia has strictly only single payer auto insurance. They have 3.2 million cars, which is interesting because it's not that much less than Massachusetts with 4.2 million. Massachusetts pays about 4.3 billion a year total statewide. And even they buy reinsurance of some sort. So that's why I always insert that phrase, Arlington as a member of a statewide network, because they would be contributing to a self-sustained reinsurance pool. And if necessary, the state system in its entirety would be buying reinsurance. That's a whole topic that would have to be tackled. But presumably the intensified prevention work that would go on and the better decisions that would be made about policies about where you can build near the flood zone and so on would even it out. Whether it was in the form of stop loss or not, but it would be reinsuring the entire state system.
I have some ideas, but they're probably just really naive because this is not my field by any stretch. But I was thinking that I guess you could price the premiums, early on, at a rate that would decrease the chances that you would need that stop loss. And then I think one of the models, the Friends model, was that people get some money back if it's not used. And so you limit the amount that you return in order to build a bigger reserve, to handle the very low probability years, where you get lots of claims, but you're always returning something, because presumably, the only way it'll work is if your claims don't outweigh the premium. That's probably a very naive way of looking at it. So
No, you're right. My insurance agent was fun to work with on this. This was like 15 years ago. He said one way you could actually start this was actually what Friendsurance did. He got on his computer and he looked up, if you got a group of people together, say 100 families, and you bought, you can lower the cost of your own house insurance by getting a higher deductible. if you choose to get a $5,000 deductible, your cost goes down. So you have a group and they choose to get a $100,000 deductible and they set $100,000 aside. You could actually do that, probably. But he was able to look, how much does it go down per household as you increase your deductible? And in that case, your insurance company is backing up your deductible in a sense. So all these kinds of ideas are possible. But if you were to actually organize a political movement on the basis of communities knowing themselves better, possibly, you know, maybe it's just a pipe dream. But the logic is people will care a lot more and be a lot more informed.
Well, what I like about the idea is really the ability for the community to get to know each other, get to know itself better, and it gets people more involved in learning what they can do to mitigate their risk. And the current model, I think, it just really shifts the risk to someone else, and there's an efficiency in it, but I think that efficiency comes at the cost of us knowing how to, manage our risks better, and so, yeah, there's an appeal to it in that you understand better how it works and what you can do to make just your community work better.
One of the reasons that I find it just fun and interesting to keep pursuing the topic is I ended up reading so many histories of insurance plans, mutual aid societies, but also the histories of Arlington's town meeting, which you can walk into the clerk's office and look at the old reports. So basically, it would be returning to our old way of doing things with a lot of technology and a lot of managing of risks that didn't used to exist. The 1935 report to town meeting includes how the town Department of Welfare handled the federal public works program. They supported 1,600 families. And you see the actual text of how the town handled the administration of what would now probably be a mix of Section 8 and I can't name the others off the top of my head, but they're managed from a federal level with very little town involvement. And it's incredibly informative to read these old reports. Even in the 1950s, the town was recovering costs from other towns. So if your settlement was in another town, they would recover the cost from the other town. There was an incredible amount of data on the town paying for tuberculosis treatment, how much the town was paying to all the different sanitariums. I mean, the town was on the hook for a lot of cost. And so people were intensely aware what the costs were. The police reports to town meeting did include how many people they arrested for gaming. I suppose gaming is gambling. And so you end up with a very informed conversation about how aggressive or how intrusive are we going to be in the way we handle these things? Are we going to take guns out of people's bedrooms? I mean, you start to approach these things that are going on today with a different perspective.
Yeah. Well, and generally my response is that you just try to educate people. And so I think for most reasonable people, education will go very far. And you don't have to worry about impinging on rights. And so it's all about risk reduction. I think I won't say it's impossible to reduce the risk to zero, but I think maybe the social costs in taking the risk to zero aren't worth it, especially if it impinges on fundamental rights, I mean, as we define them. And so I'll just stop to say that Louise Strahan put it in the chat. It would be very informative to hear about Arlington's experience managing its own workers' comp. I bet a lot was learned through that experience, and it's close to home. And I agree. I mean, and so that's part of what Michael Cunningham will discuss when he joins us. Am I correct about that, Andrew?
Yes. I actually interviewed Ed Marlinga years ago, and that plan is required to expose itself to bidding from outside insurers every 5 years. And every 5 years they come and they look and they say they can't touch the cost. It's that we save a ton of money through the self-insuring program. And part of it, he stressed, and I actually interviewed town employees. They stressed that they're protective of the budget. There are even stories of town employees who came to the town saying they had an injury, but they didn't report that it was at work. They didn't realize that their health insurance was also self-insured at the time. So they thought the town would save money because Blue Cross Blue Shield would pay, their third-party administrator would pay. Do you get what I'm saying? I didn't say that very well. The employees thought they would save the town money if they went through health insurance, because Blue Cross Blue Shield in their mind was going to pay for it.
Right.
They didn't file for workers' comp.
Right.
Because they cared about the budget.
Right.
All of a sudden, it's like an old-fashioned family setting almost, and that's how they talk about it. But it'll be great to meet with Mike Cunningham. He's very enthusiastic about these ideas. He has 15 years working for Nationwide in various capacities in workers' comp.
So I have a question for you, Andrew. So why do you think, this isn't done more?
Oh, it's done a lot more than we realize. A friend of mine worked in the exhibits shop at the Museum of Science. And I volunteered down there a couple of times, helped build some things 20 years ago, I guess. And one day he told me, hey, the Museum of Science started self-insurance. They explained it to us and everything. They had to put aside a reserve. And he said, yeah, they made us put the guards back on the table saws. The whole attitude of safety was changed. You just don't mess around, and everyone understands it because they're under threat. Your budget, the budget of your organization is now vulnerable to if you screw up. And
so I get that, but then that could make people shy away from wanting to do it, right?
Exactly.
And so then, so as I said, it's all about shifting the risk. So then, how would we convince folks here that it's worth taking that risk? I guess the answer to that is that you tell them, well, yeah, it's that risk, but only if you don't reduce the risk. So it's now in your best interest to reduce the risk.
Well, it makes for a really interesting argument. And to me, it's a much more fun and interesting argument than the one we have today. Seatbelts would be a good example. We did back in the day have a libertarian in East Arlington lead a great fight against the state requiring the use of seatbelts 15 years ago. And you can do it by saying, well, before we had seatbelts, here was our average cost. Look at how much money is saved, not to mention suffering reduced. You probably have, they used to say auto accidents were the largest cause of head injuries and particularly seizures. And if you see a mass number of seizures going down from seatbelts, you put it this way, you simply have more graphic absolute data that tells you what's happening. We just hear rumors today about, for example, losses due to distracted driving, like with cell phone use. But if we had a notion that we had X number of accidents last year in Arlington caused by cell phone usage, I think people would feel differently about it. Right now, we have a law against it, and some of us follow it. But I see a lot of people on their phone.
So I see Chris has his hand up, and so I'll hold on a second.
Full disclosure, Chris is an old friend of mine from Kalamazoo College.
Oh,
Yep, old friend. But we've talked a lot about a lot of the qualitative reasons for doing this, and there certainly are a lot of really good reasons for doing it. But in terms of the question of motivating people or getting people to want to participate in this kind of an arrangement, isn't there also a significant cost savings in terms of premium? I mean, isn't this also designed to result in lower overall costs for most people, at least, which would kind of help, I would think, get a wider group of people interested in doing this kind of thing.
Yes, I think there would be quite a debate between folks. There would be a range of folks who simply want to lower the premium, end of story. And then there would be people like me at the other extreme, I would call it, who would say, no, let's try to keep the premium where it was and use the excess to lower the property tax. Or there's probably a middle ground. The British Columbia plan is humorous. In 2010, they started rating the auto insurance program to supplement the state budget. And that went on till about 2016. And then there was a bit of a scandal because rates started going up. And they said that the rates were going up because of cars got more expensive and complicated. Bumpers that used to cost $600 to replace now have sensors and so on, and they're like $1,800. People started driving faster for some reason. And now that plan is in financial trouble. They're sort of going through things that we went through 10 or 20 years ago. They're just now getting rid of lawsuits and going to no fault. But you're right. Hopefully it would also lower the rates, but also it would enrich the towns. And then there's this whole idea that you can justify investing in improving your own infrastructure. A big thing in these 3 provinces in Canada is each of the plans offers opportunity for people to apply for grants to redo their intersection. And they say they get $4.70 back for each dollar they invest in improving improving the intersections and different things. So it turns in, that statewide program turns into a source of revenue for towns to do infrastructure improvements. I can't prove that the British Columbia plan in particular is wildly popular. I'm pretty sure it is, but I've never gone up there and interviewed people. And that's actually a project that interests me as something that another thing that a committee could do to really look at how those programs work. They're administered in British Columbia, it's the British Columbia Association of Insurance Agents. And those insurance agents, I do know that they're enthusiastic about their work because I've seen letters written by their director. But it's a whole different world. It's insurance as a community service. That their webpage is amazing. You can find anything out, how many people got a broken neck last year and when it happened and what intersection. I'm not exaggerating. It's a completely open system. And it truly makes us look like Mickey Mouse. I shouldn't be talking like that, but it's true.
Well, I think this is a first, and we'll have another meeting with Mike, and I think we'll also have some conversations with the civic engagement group before meeting with Mike, because this is really just to kind of get this process started. And now I think we need to, in next successive meetings, we have a little more structure, and think through some of the next steps, whether they research into what other towns are doing, or how to go about doing research in respect to what we're doing here. You certainly had some ideas for what a committee could do. So grab one or two of those ideas and really start working on them. And so the nature of the civic engagement group is that the group it's a loosely knit group. It doesn't dictate what happens. Essentially people come with their ideas and they talk about them. And if people want to work with them on that idea, then they do. And so usually the proponent of that idea is the one that leads it, and then kind of structures the way that subgroup works on that issue. And so in this case, Andrew's the leader, and I am working with Andrew, helping out when I can, and learning the process. And so so that's where we are here, and so I would say, unless there's something else that someone wants to say or ask, we'll wrap it up. And we certainly have we can get in touch with you through your registration email address. Andrew put his email address up in case you want it. I guess he wants to set up an email list and you want to be a part of that. So any last comments, questions?
Yeah, if I may, just to resonate with your comment about the way Envision Arlington works. It really is true. Anybody can get involved. I would never have gotten involved with this stuff, except that I started going to Vision 2020, it was called back then, meetings in 1998, I think. And we went to town meeting, and a town meeting voted a community-based health insurance study committee with an incredible co-chair who worked in the industry. And that's where I learned a lot of the material that I came into and got really interested. So it's meant a lot to me. I'm grateful for the opportunity. But that's all. That's kind of the history of how I got involved with it.
All right. Well, thanks for pointing that out. And so then, what was the upshot then of that committee's work?
Our main finding was that insurance is a poor manager of information. It leaves the communities in the dark. And that was pronounced because we studied the way self-insured plans worked. The self-insured employer plans, the good ones, they really help the employees, and the employees appreciate it by all accounts. How often have you ever heard of violation of privacy with one of these employer-based plans? And most people are really happy when they get into one of those companies. That to me is a pretty good indication.
Yeah, and so I guess then what was the point of the committee, and did it achieve its goal, and why didn't the town do anything beyond the committee's existence?
That was in the time of there was a, what do you call it, a statewide referendum to establish a single payer
Okay.
system. That was defeated, I think. And Arlington's version of what later became the Accountable Care Act, Obamacare,
Yeah.
preempted us a little bit, but mainly really it's just the massive resistance to change. We were also talking about auto insurance, and the town meeting approved a resolution that the state should investigate the costs of auto insurance.
Right.
But and we stopped meeting, in my memory, simply because we felt we had hit a wall. We had learned what we had learned, and it was obvious this other direction. Any organization that can self-insures, but the inertia against it, and also, I mean, my fantasy is that with a more accurate understanding of what's going on, you can even conjure up an understanding, a scenario that says part of the reason our society doesn't seem to know how to behave is you don't have this immediate feedback of how we behaved last year, what caused the problems. I mean, this gambling thing, to me, is really a glaring example. We can't argue about whether we should legalize gambling because we don't have a clue of how much of a problem it is in each community. And the only way a community can find that out is to have an infrastructure that helps it find it out. It used to be the case.
All right. Well, thanks for the answers. Well, we certainly have our work cut out for us. If as one of the members at the CG meeting pointed out, we may have to do more to publicize these meetings. At least the next one. What we did this time was we put it on the calendar and we had it go out in the weekly email, the weekend email. And I think you sent email out to town meeting members last night. And so
Yes.
you got some responses from folks. I mean, we do know that there are probably 10 or so people who would be here but can't and want to see the recording. We don't know how representative that is of the community at large. But anything worth doing is worth persevering through. And so I think it's worth looking at a whole lot more. And so I'm looking forward to seeing what Mike has to say and taking it from there. But before we even get there, figuring out what more we can do. So I'm glad you brought this to the attention of the select board while I was there.
Yeah.
So I am happy to continue working with you and learning about this. And so thanks everyone who joined us, and hopefully something good will come out of this sooner rather than later.
Thanks very much. It's
welcome.
great.
So
Appreciate it. Thanks for coming, everybody.
night, everybody.